There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome to the Saturday Software Strategy Session with Steve Vettel. Today is the 18th of June. Hopefully my microphone is working. Let's take a quick look here, see if we are live on the broadcast. The infinite and infinitesimal screen share, which I never really understand kind of how this all works, but seems to work. In any case, follow me on Telegram. You can follow me also on Twitter. Couple of the things, this is at FXES Trader. It's been my handle for over 10 years. Take a look at some of the stuff I retweeted, which is usually what I do most of the time. So for those trading equities via whatever options, futures, ETFs, individual equities, certainly in the form of any other kind of MT4 platform based algo, or just you being a discretionary trader. This is pretty interesting. So Sentiment Trader is a big guy I follow. This guy probably has some of the best insight into what's going on, just looking into current versus past sentiment, right? So 90% of the S&P 500 technology stocks are down 20% or more. A lot of them, especially with some of the biggest names that I follow, I'm looking to buy again, they're off 50% or more. Anything that has any sort of China twist, which I try and stay away from for obvious reasons, is down 70 to 80% off of the highs. Some of the biggest flyers. In any case, so follow Sentiment Trader. He's got some pretty good insights, and essentially the 90% of the stocks, this is June 16th, so this is a couple of days ago, but this is the fifth time in the past 7 days since 1928, been exactly zero precedents. So this is the most overwhelming display of selling in history in terms of statistics. Doesn't feel like it in terms of actual decline, but we are off over 20%, which we have been squawking about to our clients at First Down for 6 months. So no surprise that it is finally coming to fruition. But as I always say to everybody, students, employees, clients, all the AP subscribers, the best time to purchase any asset is usually when it does not feel right? So it's the opposite of emotions. But the best time to purchase almost any asset is in the ashes of a wreck. And that's really the key. And it is possible. And I don't know why I didn't post that, but maybe I'll throw it in Telegram later. I follow a gentleman by the name of Dan Niles. He's actually a very smart gentleman from India. He runs a really good hedge fund, and he is very, very transparent with what he does and why. I don't know why I didn't retweet that. I thought I did. But I took a screenshot of it, so I'll actually post it up on the Telegram channel, which gives you a reason to join. But he's just talking about how, in the ashes, so to speak, he's basically long right now. So it's like the first time in a while he's been long of mostly stocks inside his portfolio, and he's basically crossed out of all his short positions. So Let's go into the Forex Factory calendar for next week. Again, you always want to make sure you're on the right date, as I am not, but now I am. As of next week, we start off with June 19th, which is tomorrow, Sunday. So nothing going on there. All day bank holidays. You may know it's Juneteenth. I still don't understand what the hell this holiday is, but National Independence Day. I should probably know that better, but why don't they just call it National Independence Day instead of Juneteenth? I don't understand that. Any case, and mostly it's just my fault for probably not paying attention to being a dope. But in any case, so it is a holiday on Monday. Do note that typically, even though it is a holiday, the exchanges will all be halted, but they'll all start trading futures again after that, 4 o'clock to 6 o'clock, depending on the time zone you're in, sort of time off, if you will. So, the futures start trading again in the evening on Monday night. So I'm not sure if you guys all know that, but, may or may not, be an active market, obviously, because it's a holiday, 3-day holiday. But, it is a bank holiday. So in any case, the next week on Monday, so we have RBA. This is the Royal Bank of Australia. Governor Lowe, he's actually a pretty good guy. Contrary to many central bankers, he's going to be speaking, to be alert of that. And keep in mind, these are Eastern time numbers that you're looking at. Always correspond them to your own local time zone. So retail sales, this will certainly be interesting, even though we don't live in Canada. Many Auvoria subscribers do. And it will be interesting to see if the inflation is starting to continue to rock that country. So anything that stands for Consumer Price Index, obviously it's important. This Fed Powell starts testifying. I think this is the this is right. It's the semi-annual. So any of the semi-annual, Humphrey Hawkins, all that stuff. This is all completely scripted stuff. So I don't expect him, but it doesn't matter anymore. And you're probably wondering why the heck am I saying that? Because he basically just threw all his cards on the table last week. I think that's what's really surprised the market. I think the market expected, albeit I have a twist that I'm going to present and just a thought. Is that the Fed is doing one thing while continuing to repurchase on the back end. So it's like they're doing one thing at the front of the building, and at the back they're still purchasing everybody that comes to the back door of the building, right? So remember, if they purchase in any form, right, they are buying assets. These are mostly bonds. They are buying assets and they're putting cash in the marketplace, right? So that is, for lack of a better analogy, similar to the quantitative easing, albeit they'll use different avenues of repurchasing. The key is I think they're just going to raise interest rates, maybe not as much now. They did a whopping 75 basis points last week, which is like historically pretty damn unheard of. But they're obviously seeing that this inflation, which is mostly energy based and is the fault of a lot of things, including demand, but most importantly, a lack of supply that has been adequately thought out in terms of its potential down the road. So the fact that this country has shut down so much of our energy independence based policies, which I completely disagree with, but everybody has their opinions, right? But for a reason, the energy independence path we were on as a country, whether you believe that or not, you are now seeing the repercussions of the absolute reverse of that, right? So I think that the surprising thing to many, not to me, has been the complete change of opinion and attitude by those that just don't know, right? They take an opinion for one reason or another. And those that did not want energy independence, which is, I guess at the time you could argue half of this country, now they're completely regretting their stance on that. And until we get energy dependence in more forms, it's just going to continue to stay high as a price. We could easily see energy this high for the next 6 months. So I will get down off my soapbox of capitalism. Let's move on to discussions in the charts. So Fed Chair Powell, Thursday morning, 10 a.m. Be aware of it. I would not be trading around it. Charts. Everybody's favorite. Finviz.com. All futures daily. These are the settings you want to see to look at the markets broadly. We had not much of a reprieve from the selling, albeit Friday was almost like take a break day. Not really much of a rally. This doesn't really speak good for us finding any kind of measurable bottom, albeit there has been third sigma selling that's been hit on long-term charts. I'm not going to get into a lot of showing the detail of that. Just know that we're really oversold. This is that wreck that I talk a lot about, sifting through the ashes. But it takes true guts and grit, like Dan Niles-esque type grit, to go in while all others are blowing up and selling portfolios and liquidating ridiculous levels of margin, which they should not have had as a fund in the first place. It takes that type of moxie, if you will, to truly make it a great investor. Just keep that in mind if you guys are sitting in just major chunks of cash and you have long-term goals for it. There is some ashes in here. You could start sifting through. I'm not going to get into the charts and the details of it. I'm just saying, know that we certainly could have a pretty decent rally in what is now a bear market in equities globally in developed markets. So the bear market rallies are always swift. They can be very vicious because of the fact that the boat, as I've talked many times about in the past, gets ridiculously overloaded to one side, as we are short now, and the face rippers can ensue. So just be careful of that. Even though I know many of you don't trade off of daily or weekly charts as I show, I try to stick to just the macro overview of this stuff. But the key really is just understanding that we've come a long way and that we're probably going to rip back up to certain degrees. How far, how fast, how long, it's anybody's guess, right? But as I go in, I'll show the chart of the S&P. I have some theories, right? They could be wrong. It is interesting to see gas come down a bunch, right? Remember, this is a daily chart. So for the first time in a while, we're trending down in the crack gas spreads here with the RBOB, right? Don't pay as much attention here, even though we've come down a bunch. A lot of this is a factor of, I should say in both cases, this is a factor of rates going up. So for those of you that don't understand when any central bank raises interest rates, very simply, the rates go up, overnight lending rates to banks and the federal funds rate. It trickles into every area. The only area it doesn't necessarily have a completely perfect correlation with is mortgage rates. Why? Because they are set based on the 10-year, and a couple other factors, but mostly based on the 10-year and how it trades, right? We've had a nice reversal in the 10-year off of this. It's probably a great time to have been buying bonds because they just got clobbered, right? And you can only go so far. These are very simple charts. They don't show these huge, standard deviation areas that have been just blasted through on not only daily but weekly charts right here, as you can see. But long term, we really only are back to where we were, and this is a little better illustrated on these FinViz charts than it is on my trading view stuff. But see how we're really only back to where we were towards the end of 19. So this move here, which is just continuing to go up, we've had a period of time since the beginning of the year, which starts basically right here, that you've had bonds and stocks going down. Typically, they're inverse of each other, not always, but now they're running perfectly correlated because you've had a period of time, and a little more than 12 years, maybe. Is that right? 08. Yeah, well, you give or take a year of nothing but quantitative easing by the Federal Reserve. So essentially, it's that backdoor operations that I keep talking about, where the Fed's doing one thing at the front of the store, but at the back, everybody's rolling in with bonds, and the Fed's giving them cash. Like, that's kind of a new analogy for me. It's probably not the best one, but I always try to put this stuff in the context that a fifth grader could understand it. And all really matters in any of this discussion is the Federal Reserve from any country, right? Any central bank, are they purchasing assets or are they putting them up for sale, right? So if they're purchasing assets, they're taking assets off of the marketplace and they're putting cash back in primary dealer accounts all over the world, right? So primary dealer, what the heck's that? Well, primary dealer accounts are companies like JP Morgan, Goldman Sachs, any of the big investment banks, Barclays, and the like. And they put cash into that, and it trickles out in the form of a variety of other things. But the more cash that is put into the system, the cheaper money gets. And the exact opposite of that is happening. But markets were in advance of that, pricing that in, right? And it's a simple thing. If somebody has, if Janie has a bond that's paying 1% in dividend income, and Johnny's got a bond that's paying 2%, what bond do they want, right? They want Johnny's bond that's paying 2%. So what happens to the price of Janie's bond? It goes down, right? They don't want those bonds, so the supply increases. Janie's trying to sell them. She's putting more on the marketplace. Nobody wants them. She has to lower the price to a point where they become attractive to be of purchase, right? And this is the case, simple supply and demand. I know I spend probably way too much time on this, but it's just amazing to me of even the people in the business world that I run into don't understand the simple mechanics of supply and demand. I think and I thought it was super cool of Governor DeSantis to require that as a Florida curriculum now, that some people have, a basic course on business before they get out of high school, because I think it is a concept that every human being on this planet should at least grasp from a macro perspective, because it makes your decisions, again, risk management, right, on anything much more informed. If you have a more informed decision-making process, the risk to you is less. Doesn't mean you can make the right choice, but the risk to you statistically is less. So, what else do we care about here? Well, I have this Auvoria tab open here. If you guys scroll down to the bottom of any page, you can see all of the social media links we have here. This is the Vimo channel. And I'm liking this more and more. I actually think we're going to set one of these up for first down, because it just cuts all the crap out of YouTube, because it's more corporate and business friendly type channel. But you can go in and see my market watches. You can sort them by everything that's going on. As I always, guess I've kind of gotten away from this, but make sure you always see at least the recording of the developers of whichever algo, I guess, you're using, or whichever software you're using. The recording at the very minimum, and you could catch, one of my recordings. I usually go into a deeper depth on Saturday, but had a couple people asking where all your stuff is, and everything is centered in a nice layout here on Vimeo. I just call it Vimeo. In any case, let's go to the charts. S&P daily. You can see the carnage here. I always try to stretch these things out from the very top. Come a long way. We're probably digging around probably in the ashes next week. We'll see. Doesn't mean there's not another leg down. All this means from a risk perspective is if one has X amount of capital to deploy in investments, you're not sure, you don't want to try and catch a falling knife, dip your toe in the water. I don't really have a problem from an investment perspective. If somebody was to take, I don't know, make up a number, $10,000, it put $2,000 of it to work right now, right? Market falls again, and obviously this is almost always predicated on you have a longer term goal for that pool of 10, right? Don't put all in one stock or in one crypto. God forbid, stay away from crypto at this point, as I've been warning for 6 months. But always find quality companies to invest in, and just dip your toe in. Yes, we could rally a whole bunch, and you only put $2,000 to work, and you should have put 10. Use that as a learning experience. Do not let it eat away at your brain. Okay, risk management, controlling that inner monkey of your investment. So just be a hunter that wants to sift through the ashes, but not necessarily, because what if old Stevie's completely wrong and that the bottom's not in, right? There's a distinct possibility I'm wrong. And, I actually had a client last week. She's like, Steve, I've been listening to some of your blogs and some of the stuff you talk about with that AP company. And she goes, you're always talking about being wrong. She goes, well, you've been kind of right. She goes, you should just. I'm like, no. Bad path to go down there. Let me stop you right. I actually interrupted her when she said, I said, do not. It's not wise. You always want to just continually pretend that you're wrong, right? Don't let it eat away your brain. But the whole point is that you are taking a defensive position against anything you own. And I don't care if you're collecting artwork, cars, watches, whatever, right? Buying real estate. It is always better to sift through the ashes of wreck. We don't get many wrecks, so it is a rare opportunity. In true wreck form, only comes around once or twice a decade. You have to take advantage of it while it is. It doesn't feel right. It feels weird. And usually when things feel really strange or scary is usually when you're making the best decisions, as far as a timing aspect. So, this is, because I always am like, well, I can do this and I can do that. And, I'll have clients, hey, can you teach my kids about all this? And, I direct the children to a number of pieces that have been exceptionally well written for youth to understand money. And it is very straightforward. If anybody wants, you could certainly hit me up. I could give you a couple of links to these pieces. One of them is actually a book. It's really good. It was written by a guy named Bob Ferris, who nobody knows who he is, but he's like the what would you call? He's like the Andrew Weil of the RIA industry that I'm in. He's a top level consultant, and he's owned an RIA, but he's more of like the wisdom writer guy. He hosts the annual T3 convention, and they are essentially the thought guys, or the thought provokers, the TED Talks guys, if you will, of investment advisor industry. So they do a lot of high level thinking. He actually wrote a book for his daughter. It's called Finances for My Daughter. It's actually an excellent piece. It's one of the best I've ever seen, and I don't know why he doesn't publish it, but he gave it to me free because I kept bugging him about it. In any case, all right, so I'm off on my diatribe. Let's talk about the markets. All right, so I think enough on the S&P, enough on where I stand. Let's take a look at, I'm going to skip past all this other stuff. I know sometimes these broadcasts aren't always crypto, aren't always currency based, but that's for a reason. I think it's me duty to explain that there are lots of other places to invest in the world, in addition to the products at Auvoria. But it is a great start because we're getting a pretty deep product breadth or bench, and the crypto one's coming. I don't know how well the timing is on that, but certainly take a look at that. I have not looked at it, so I don't know much about it. But stay tuned. I'll get in the fray. All right, DXY. Let's look at that first. I guess according to price and movements, it's the lesser of all evils at this point, as far as flight to safety that we've seen. But this is the breakout right here. This whole 97 area, and we have essentially been ascending since then. And this was February, and now that you hopefully are beginning to understand how, even though it's sort of wackadoo, the correlations work with the price of bonds to the price of the dollar, right? So the dollar has risen a bunch because all the other currencies have gone down because bonds have gone down. So it's sort of a strange set of factors, but it is certainly to change at some point. Although we have moved really far, really fast. And if we take a look at a 5-year chart, actually, there we go. In the grand scheme of things, these is I'm just looking back 5 years, but it puts in perspective that we broke past, which was a pretty big area of resistance, crashed through it actually. Now, notice what? Support. So there is an argument for bouncing between 102 and 106. How long, how far, how fast? I don't know. All I know is I try to define when trends will stop and begin to trade sideways or build a base, if you will. And then that gives me a much greater edge in trying to trade it. So I would assume at some point, barring any complete considerable meltdowns, although that would not surprise me. I know that there's been some pretty big contagions in crypto land, so I would not be surprised to see a bunch of spectacular falls in some of these exchanges and wallet companies. And it also does open up the fact that if they do fall apart, can you actually get to your coins? Something I don't know the answer to, but just a question of risk, right? If they start to fall apart. Here's a great example of risk. This is a chart of Coinbase. I can't tell you how many superstar people I have noted their talking their book, if you will, that swore on their life that Coinbase wouldn't be a piece of crap ever since the day it went public, right? As I tell many times to all of the folks I speak to out there, charts don't lie, people do. Let's look at that chart. If that doesn't tell you what's going on in crypto, I don't know. The suckers, right? This is where Wall Street gets a bad rap for a reason. The suckers were the ones that were buying up here. And the Coinbase guys that got rich, or the Wall Street investment banks that helped them go rich. And remember, not everything is immediately liquid. As the owner of a company, you have what's called lockup. So some of your shares are in different types of tranches of lockups. They are released depending on a period of time. I don't know what it is for Coinbase, but I caught a fair amount of crap when I said the single best day to own this stock was day one, and hopefully you sold it. I probably got, and remember, one of the beauties, I know a lot of people complain about this that are out there publicly to, make remarks. They complain about all the trolls. But if you think about it, from a risk management standpoint, the beauty of a lot of trolls coming at you is that the more they come at you with more ferocity, the more you know you're right. Think about that. So I took a fair amount of heat on this because I basically said there's no way I would ever buy this. And I don't think it's going up. I think it's going down a bunch. So this isn't about Steve being right and parading myself around. It is about understanding that when the mania is crazy, I'm not a buyer. I'm a seller. This typically flies in the face of what's going on. So I guess since we're on the coin subject, I might as well talk about the continued pain in crypto. Spend some calls in crypto land for the evaporation of Bitcoin. I don't know enough to comment on it. I know that the three gentlemen that have been talking about that a lot are much, much smarter than I. So take that opinion of what's going on for what it's worth. But they have been haters since day one. So maybe that makes them biased. But let's put it on a weekly chart to get rid of the noise. Still thinking at some point the visitation back to the point of breakout, which was right here. That's like arguable in this area. I'm pretty sure this whole area around 12,000 is a magnet for price at this point. Because truly, if it can hold its breakout point, this was a while ago, remember, if it can hold its breakout point, then arguably it has hit its selling max, right? Max pain has been achieved somewhere in this zone. I could be wrong. But that's what I'd be looking at. The problem with a number of high profile exchanges going poof in crypto land is that it continues to unsettle and scare the crap out of investors, especially the big ones. I know there's a couple of high profile guys that were obnoxiously flaunting crypto wealth that have blown up in the last couple of weeks. So a spectacular rise and fall is not a great way to live your life, in my opinion. So it is a recipe for suicide in some of these cases. So, understand the risks and the rewards of it, and put yourself in a position to be successful, sifting through the ashes, not holding on for dear life when you bought at 60. I know that sounds rough, tough, brash. I can't handle it. It's not the right advice, Steve. But I always promised Bill and the owners of Auvoria that when I came aboard, you guys would be getting absolute transparency and in some cases just raw investment advice. And it is not going to be filtered. And I hope, as I've gotten many of you say, that they will never invest the same way again because of some of the ways I'm pounding risk management into their heads. So that means that I've done my job. And for that, I am proud. So let's shut up about all that stuff and talk about some more charts. Let's see. So we got DXY. Let's take a look at the euro. This is going to be an uncorrelated or completely inversely correlated to the dollar chart we just saw generally. All right. That looks to be the zone. 1.08 to the bottom. I would expect, given a calmness or a coolness or a reprieve, if you will, us to trade sideways in this zone. Let's take a look at the NEO currency. Always interested in GBP CAD. But before we do that, pound dollar, right? We want to take a look at that. Big bounce off of multi-year. Actually, look at that. It's almost a perfect bounce off this level. One spot, 1962 area. All the way to 40 to 60, essentially, area. It'll probably hold for a little while. We get back down there again from a swing trade or a quick trade perspective. Maybe a place you'd want to go long. CAD JPY, the carnage in the yen really can't continue forever. So you would expect it to pull back and somewhat bounce, but see how we're riding a weekly. This would be one you could take a picture of and show it to your kids. We're riding a weekly Bollinger Band up. Very rare, not normal. Always got to take a break and try some mean reversion in these cases. What else? All right, so from the pound to the Canadian dollar here, the reprieve, taking a break, whatever you want to call it, sideways trade, building a base, trading in a zone, looks to be somewhat between this area. Unless the pound continues on its demise and lots of other pairs, I would expect this to take a break and start to trade sideways. And honestly, there's been such movement. It wouldn't surprise me at all if we traded sideways all the way through the summer. Yes, risk is high, right? We're not on DEFCON 5, but now central banks have puked, if you will, and shown all their cards on the table. Now it's up to global markets of all types to figure out, sort out, what strategy or tactical movement's going to be going forward based upon all information that's been puked on the street. That's the key. Oftentimes when that sort of dump, if you will, comes out, you have a consolidation period. Whereas before, everything was going bananas, pricing in a lot of these moves. And they are effectively or not that pricing in. In many cases, the pricing in wasn't that efficient, right? Markets aren't always efficient. The least liquid ones are very rarely trade efficiently, which means there is room for wildness, right? Volatility, VIX rates going up. But the fact is with at least the equity markets, for those trading equity-based indexes on MT4 with any of our software, we have not hit, and that's kind of why I use the example of, take $2,000 of your 10 or whatever the number is, and maybe start playing around if that's long-term money in some of these ashes, is because we haven't hit a capitulation mode yet. Once we capitulate, the bottom's in, right? Go look back on charts of almost anything and see where the capitulation took place. And then participation started to grow in the form of larger volume after these exogenistic events took place, right? Based on whatever news came out, the point is you have to find a base and begin to trade off of it higher, right? Bounce, arrow, go uses that concept to a reversal and then a change of trend to catch on early, right? I use an opposite form of that, that not as a trading strategy, not against that, but I prefer to see the trend start to put itself in place and then get on what's called a slingshot back, right? That is where your least risk is. I guess in this case, your first break of whatever lower or your first break of whatever higher, there'll always be a chance to come back and visit that move, maybe to the tune of like a 50, 67, whatever type of retrace on a fib chart. And then it's going to resume trend. That is your least risky entry, typically, right? Not always. I've illustrated that at least a bazillion times on these calls, on many different charts. All right, so I think we have a defined zone that we're at least targeting on this one. We'll take a look at GBP and ZD in a while, huh? Back to the daily. Tight zone. Crazy, huh? It's almost like everybody forgot about this currency. Spot gold, again, daily chart, tight range. If things were truly that bad out there, how should I put this? If things were truly that bad out there as far as demand is high, hence higher prices, right? Since inflation. But things have typically, when they're really bad, gold's much higher. We're just not seeing it. Personally, I think that every time we get up around these levels, you really need to see this on a weekly chart to understand it. But once we get up around these levels, I just think there's some big sellers up there, period. I don't know who it is. It doesn't really matter. We call them other time frame players. So essentially they're OTF players that are sellers up there for reasons of wanting to unload, which is more than likely an over a position they're too heavy in. I know I'm sort of all over the map today, but I think it's just trying to illustrate a point. Still see us being in the zone for some time. Got more work to do trading sideways in the spot market. AUD CAD, tight zone, as I've talked about, nothing really much to say there. Obviously, the strength of the British pound is really only seen here. Or the strength of any currency, I should say, in comparison to the JPY is only seen in that comparison. US JPY. See, by the way, this is a slingshot. So if somebody's on a real break and you're like, I'm not going to just buy here. You want to buy on a pullback, right? This is the place to do it. Now, whether or not this was visible, but you had 3 days, and typically a pullback lasts, 3 to 5 days, usually, not always, right? If you're working on or trading on longer term charts, that's a good definition for a pullback time, 3 to 5 days. Then it resumes a trend, wherever that is. And what else? Euro GBP. Again, this is a weekly chart, so I want to show the big old zone we've been in. Notice we popped out of it, or back down inside it. A lot of that was just the pound's reversal because it had come too far, too fast down in comparison to most other currencies. So, you're living late to the game at that if you're continuing to be short the pound on those extreme out areas where you're more likely to have it rip back in some sort of median or a mean reversion. Oil. For those of you driving gas guzzling vehicles, which I can officially say I don't have any gas guzzling cars anymore. There you go. Starting to get a break at the pump. Remember, this doesn't necessarily transpire into RBOB gas crack spreads going down. That's why I much rather look to see the RBOB. What else? Here, you guys want a spectacular fall from grace? Check this out. This is a chart of Shopify. You don't know who these guys are. They're basically the Amazon of the Far East. Just absolutely blown up. You go to a weekly chart, you can see the carnage. Again, you know, basically wiped out all the returns of the last 3 years in less than 6 months. So Shopify was up around 1,800 a share. Now it's 316 bucks, right? Now, I'm not a proponent. Yes, this has come down for a whole host of reasons. The main one being the complete lunacy of the Chinese Communist Party and all the bullshit tactics that they have implemented on their country and crap policies. That's why a lot of these stocks are getting clobbered as they move back into communist away from capitalism. They were actually on a pretty decent path to that has been crushed. So, not an investment I'd be taking a look at right now. On the opposite side of that, which does a fair amount of business all over the planet, is one of the best on the planet. And I, for one, can tell you how ridiculously overpriced all of their video cards are is NVIDIA. This is an extremely well-run company that's totally worth buying, and I am looking to sift around in the ashes here real soon. They can't make enough stuff to supply demand. Let's see what else. So I always promise you guys I'm happy to show you where all the Kmart blue light specials are because they're everywhere. Doesn't mean you go in and buy them though. I mean, look at this. I bet you guys didn't think this would ever happen, huh? Look at the price of Roblox. I had so many people, hey, are you going to buy it? It goes public, kind of like they were telling me with Coinbase. And I came right out and I was all negative and I just told them to stay away from it. And then it popped out of a long base. And remember looking at weekly charts here. And then from there, that was the absolute crescendo high. Now it's 26 bucks. It probably is a buy here. So, you know, remember that example I gave towards the beginning. If one is $10,000 and it's targeted for long term, you don't need it for anything. That's really the key thing. Is if you do need it, don't take any of my advice I've talked about over the last hour because you need the money, right? You can't put it in these types of investments. Albeit, I love showing lots of ashes situations. This is one of them. It's probably worth looking at. Whether or not it's bottomed here, I don't know. But it's a heck of a lot cheaper than $140 a share at less than 1/4 of that price, right? This is how fast risk happens in the marketplace. Another one that's probably worth a look. Zoom used to be 500 bucks a share. We rode this thing up like a dog in a lot of client accounts. It was great. And then it just got bombed out. Now it's 110 bucks a share. What else? Yeah, I think we'll just leave it here. I really didn't want this to be a stock discussion, which is pretty much what today turned out to be. But I just want everybody to understand that, when people are fearful and there's blood in the streets, that's when you want to do your buying. And with that, top of the hour, 11 a.m., my name is Steve Vetterl. Today's the 18th of June. I try to host these calls at 10 a.m. on Saturday and 1 p.m. on Tuesday Eastern Time. I wish everybody a great week. May the trades be with you.